I believe that the Walt Disney Company is a forever business, even though it is down 17% over the last 5 years and down over 50% from its 2021 highs. I believe that as of today, there is a compelling case to be made that Disney could be in value territory potentially, although I always want my value plays to be a little bit lower because that's just how I am. And this is in my bullpen of stocks I want to own, although I don't own it yet. So I'm going to get into a little bit of the particulars of Disney, why I'm interested in owning it, and if it does ever end up in my portfolio, why I believe this is a forever company. The first aspect of Disney that I think makes it qualified to be a forever company is the wide economic moat. Morningstar agrees, I agree, and I think the general public also agrees. Disney definitely has a very wide moat. There is some disagreement around the edges of what actually defines what a moat is, but we'll suffice it to say that if you were to try to take a truckload of money and build a theme park next to, say, Disneyland or Disney World, you would probably have a hard time taking market share away from Disney. That, I think, in a nutshell, describes the moat. They, of course, have a lot of, movie studios, animation studios, live TV, etc. But I think the in-person entertainment is where they really set themselves apart as the actual greatest of all time. I don't think anybody else even really holds a candle to them, except, maybe Universal Studios is in that conversation, but I think there's nothing quite so iconic as a Disney theme park. So when I think of forever companies, I also think of legacy. Imagine a business that'll continue compounding long after you pass away. And that's what Disney is very likely to do, in my opinion, as they were established in 1923. So they've just passed over 100 years old at this point. And I believe that there's a really good chance that they could persist well past my personal investment time horizon and even past my natural life expectancy. They are just that good, that strong, and that iconic. Some vulnerabilities were discovered in the last few years. Due to the pandemic, of course, we found out that not every part of Disney was invulnerable. And due to some of the restrictions and lockdowns that happened, parts of Disney's live entertainment portions, like cruises and theme parks, were severely adversely affected, as was Disney's bottom line. As you can see, prior to the pandemic in 2019, Disney posted up a pretty impressive EPS of $6.64. It was a bit down from a year prior. I think their fiscal year went slightly into 2020, so it may have already been adversely affected. But if you look, you'll see it's been a struggle for them to get their EPS back up to that pre-pandemic level. However, this year, 2024, is supposed to be a very big year for Disney's recovery. And they are expected by a lot of analysts to get back close to those pre-pandemic levels in the next 3 to 4 years. Now, granted, that's a long time to wait, but sometimes good things are in fact worth waiting for. I can also see why analysts would rate it mostly as a buy at the moment. The low analyst estimate for a 12-month price forecast is $76 with a high of $136. The high does more closely resemble the types of price multiples Disney used to get on earnings, and if you match that up with where their earnings are projected to go, it's a pretty close fit at this point. Now, granted, the price recovery is expected to be a multi-year process for Disney, but think of it in the long term. Waiting 3 or 4 years for something to recover and become extremely profitable in the grand scheme of things isn't much if you do indeed plan to hold it forever. And I have previously had Disney watch listed I believe I was around 75 at one point, maybe 85 at another point, and I am closely following what's going on with their recovery in hopes of finding an entry point that makes sense to me as an investor. So, one scenario I want to run in the DCF calculator to show why, from a forever perspective, Disney could be at a good place right now, at a decent entry point, is if you assume they get back to those 2019 levels of earnings, and you assume that they can continue some kind of bottom line growth. I called it high single digits, 8% a year for a while thereafter. You could see at that point they would be worth just over $100. Now, this is something, again, that is expected to take a few years to play out for them to get back to this earnings level. So, your first few years, you would probably have some underperformance in terms of your return while you're waiting for this thing to turn around. But then from there on out, standard 10% discount rate, you probably would be looking at a pretty decent return. By pretty solid, we do mean low double digits, around 10% a year on average. And if you think about it, Warren Buffett's legendary investment in Coca-Cola in the 1980s really only averaged him about 11% a year for the following 40 years, and that's considered a big W for the Buffett man. So if the average person could get 10% over decades with Disney, I don't think that that's necessarily that bad. Of course, the value investor in me wants a little bit more juice, of course, and this is sort of explaining why perhaps a $75 watch list might make sense to the more value-oriented investor like myself. So it's expected to be still a pretty lengthy road to recovery back to the 2019 levels, but 2025, it's expected to recover pretty well back to 535. And considering that that's only next year, I feel pretty comfortable assuming and giving Disney credit for getting back to that level at least. So if I apply a higher discount rate, 12.5%, to account for my opportunity cost, time value of money, and everything like that, and the uncertainty of them actually achieving this, and run it with the same growth rates, etc., we come out with the low 70s for Disney. Now, I think I can give them a little bit of credit, and yeah, so 75 as a watch list target, I think makes perfect sense for Disney. Heck, I might even go a little bit beefier on this and put it on 80 or 85 because Disney does have an extremely wide moat, and I do think that a recovery is pretty likely to happen back to 2019 levels eventually, or even, higher than that, and continue growing. At the end of the day, regardless of which entry point one decides to take, I do strongly believe that Disney has the potential to be a compounder, not only for the rest of one's investment time horizon, that i.e. until retirement, but even beyond and even after the natural life expectancy of anyone who is really investment age right now. I believe they will endure for generations potentially. And what a legacy that would be. Personally, when I think legacy and what I might leave behind for subsequent generations, I can't think of anything better than something like long-term compounding and returns that will really change the future of those that come after. Do you agree or disagree? Let me know what you think in the comments below regarding Disney and it being a forever company. Also, thank you for making it to the end of the video. If you liked it, make sure you hit the like button, subscribe to the channel, and hit that notification bell. It really helps me grow my audience. Also, make sure you follow me on Discord. The link is in the description. Catch me every Saturday night, 8 p.m. Eastern, Cashflow Kings Live, our other channel. Link is in the description. And consider becoming a channel member or joining the Discord. Links to those also in the description. I know, nifty coincidence.